We got a really funky thing going on here. Everybody's trying to figure out when the trade tensions manifest themselves in reductions in earnings or free cash flow to the large cap companies. And as a result, you keep getting these fantastic numbers like a PepsiCo. Everybody was so worried about that. In fact, there was some downgrades from analysts prior to this talking about tensions in trade. And this is Pepsi. It had nothing to do with the outcome. The company delivered beautifully. And yet the market is having a very hard time taking this information and driving forward with it to expand PEs. We're getting PE compression right now. We're getting great earnings, and yet the market remains relatively range-bound and flat. This is PE compression, and I'm not sure new earnings are going to drive it out of its funk.
Everyone, Bill's really excited about earnings, another quarter of 20% plus growth. Though the Journal today did come out with a story about profit margins maybe peaking or even being lowered by rising wage pressures and other inflationary metrics. Is that something to focus on, or does the overall picture look good?
Well, let's go to Pepsi and Walgreens, just as an example. Amazon has not yet announced they're going to start making their own beverages and their own snacks. So that means true. Pepsi is therefore threatened by the possibility that that will be announced at some point in time. Whereas Walgreens is already supposedly under full assault by a company that is 1/100,000th their size, becoming connected to a company that has nothing but software engineers and expertise in their industry. So I kind of like watching that analyst downgrade Walgreens today. It's like, hello? I mean, were you looking for some trades, or are you a serious analyst? 10 times earnings with an excellent, they're a dividend aristocrat. And the answer is they've already been attacked by Amazon, which means they're now qualified to have a good stock performance the next couple of years after that.
Mike, in terms of the mention there of Pepsi, clearly a good earnings report, do they have to be that strong to surprise to the upside? I mean, we talked about this the last 6-7 quarters. Yeah. Everyone always beats. How strong do earnings have to be to surprise the market as a whole? And I would also make
a note here that Pepsi was an outperformer, both in the market, along with other consumer staples, and even versus some of its closest peers like Coca-Cola.
Today, absolutely.
No, the whole year.
Yeah, it's come back.
Set up for a really poor quarter.
Underperforming. Yes, exactly. So that's what I was going to say. It's a combination of what were the expectations going in, what is the market already priced in and penciled in as a likely beat. And I think you have to have all those things work together to get the immediate reflex reaction positive. I think chances are you're going to have lots of prominent sell on the news responses and also some upside surprises, and it's going to almost cancel itself out. We really, during this bull market, have not made most of our headway during earnings season. But once you get most of the reports in there and it says, okay, we have fundamental support for the level we're trading at right now, the market can lift.
I would just note also FANG underperformed today. Yeah. I think except for Amazon, Facebook, Netflix.
FANG and Russell 2000 has been where people have been hiding as the rest of the market suffered from this trade stuff to some degree, and now they're giving some of that back. I don't know if that's a trend change or not.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.